Hi. So this is the first video about investing on my channel, and it is dedicated to the patient investor, my favorite channel on YouTube. I will link it below. If you like this, you will for sure like his videos. And if you personally are watching this, the patient investor, then I wish you will watch to the end because I have a message for you. Okay, but let's get into it. So it's an analysis on ISS. It is a Danish company. They do cleaning airports and offices and banks, most things. They do technical support for security and like otherwise facility management. And also they do canteen services for workplaces and schools and things like that. And as you can see, it's mostly office based, but then also production in factories and different things like that, and also hospitals, some amount. And they claim to be number one in globally in cleaning, with 42% of revenue coming from that, and then it's split up between technical, food and workplace. And as you can see, Northern Europe is the biggest part, with Central and Southern Europe coming as the second part, and together these are almost 70% of the total revenue. And Asian Pacific and Americas, they have activity there also and trying to grow. And as you can see, it's quite a big company when it comes to employees, with 350,000 placemakers, and yeah, truly a global company. They are, as I said, Danish company, so it's a Danish krona. About 7 Danish krona is €1. So for reference, yeah, about 15 probably dollars. So the market cap would probably be around $3 billion. But it has been quite shaky, as you can see. But yeah. About the financials, right now in 2023, 2 billion net income, and 6 billion in cash and cash equivalents, around 16 billion in loans and borrowings, which you can see on the picture, how it's split up. And yeah, as you can see, they probably will not be able to pay off it as it comes, but as you can see, they have the undrawn revolving credit facility. And I'm quite sure that they want to use this and then also keep putting it at a later date, all of the debt, as we come around to the capital allocation. That will be clear. Yeah, 10 billion in equity and around 700 million in capex is what they spend, as they are quite heavy on personnel. Then it's less capex. Can see some of the organic growth year over year. They have been growing quite well all the way since they took a slump from the COVID. But yeah, more on the financials. So the organic growth for 2023 was 9.7%, which was very high. And as you can see, in 2020 the organic growth was negative, obviously, as airports weren't as active and a lot of offices became empty. Then obviously they didn't have as much customers. But then on the other side, more places needed special cleaning, such as the disinfection for places. So they sort of made it up, but still they became highly levered, as you can see, with 7.1 times net debt to EBITDA, which they have now been working down to, and just by the end of 2023 they got to 2.2 times, which they are happy with. Operating margin around 4.3% now for the whole group, and yeah, cash flow 1.8 billion. Customer retention, I think this is quite impressive. They have reached 95%, so obviously they do a really good job in making customers happy. And when talking about outlook, there for 2024. This was reiterated in the Q1 results. They have yet to release Q2 results. But 4 to 6% in organic growth, operating margin above 5%, and free cash flow underlying of 2.4 billion, but they expect it to be 1.8 because of timing issues with a case with T-Mobile, which I will come to later. And as you can see in the bottom right here, they have been quite consistent with their outlook, so I do believe these numbers, and it's only for 2024. They have not given further than that, just goals pretty much. And about the customer retention, they and customers in general, these are, which you can see split up into the expiries. They are large key accounts, which means accounts that they bill 200, I believe, 1,000 Danish krona per year, or 200. No, it's 200 million, I believe, Danish krona per account, per customer, and they have quite long expiries for those accounts. Oh yeah, sorry about the my face camera. You can see the leverage moving right there. Yes, and about the capital allocation, as I mentioned, they want to be between 2 and 2.5 times net debt, which they just recently achieved right here. So yeah, that's in check now. They pay dividends between 20 and 40% of adjusted net profit, and 2023 that was 2.3 Danish krona, which is what, about 1.8% yield probably. Yeah, so it's quite low, but I mean, there's a dividend. And then they do investments in their own business, obviously, but also they like to do bolt-on acquisitions for different regions. And in the first quarter results, they disclosed that they have bought a cleaning and technical support company, facility support company called Gamma Rynax in Switzerland, which added about 0.6% of to the group revenue, and they said it was margin accretive when they count for expected synergies. And because they are done paying back debt, then they started in February this year 1 billion Danish krona share buyback, which is 4 to 5% of the market cap, so it's quite a big program. And they are purchasing 35,000 shares about a day. It depends on the share price, obviously, but that's around 7% of the average volume in the last quarter. So it's quite decent, and they currently own 1.7% of the total share capital as treasury shares. And yeah, about the share price movement, COVID-19, as mentioned, reduced demand a lot, and you can see a quite sharp drop. They became highly leveraged, which means that they had a hard time coming back when other companies shot up after COVID. And then also issues with Deutsche Telekom, which is a huge customer for them. They are in an arbitration process with, or ISS is in a process with T-Mobile, and where T-Mobile is withholding certain payments as of now, but ISS is very confident that they will settle this in 2025 and will get back payments of all that they are owned, and that, yeah, they're claiming it's just a timing issue. They're not worried about that, but yeah, the share price is still suppressed, even though we are actually back to the levels, I would say around 2017 and 18, where it peaked, the share price. So yeah, I would say this is bullish, and also the share price hasn't moved much, even though the buyback program has started. About the valuation then, so 2023 revenue was 78.7 billion Danish krona, and they estimated 4 to 6% growth, organic growth for 2024, which I do believe. And they also said that that is their ambition and what they believe they can achieve in the future. But I put 4% for 25 and 26 and 3% for 27 and 28, which I do believe is very conservative, considering considering they also will have the money to do some bolt-on acquisitions, which obviously would increase their revenue possibly quite a bit, and also might be margin accretive. And operating margin above 5%, they haven't said anything more, but they have been asked about this in Q&As after in earnings calls, and they have mentioned that when they say above 5%, they do not mean 5.1%, they mean clearly above. But yeah, probably they value their outlooks, so they don't want to say a number which they might not achieve. But I do believe by 2028 it will be at least 5.5, because the management has shown that after COVID they've done a lot of improvements to cut costs and make the business more efficient. They also divested French part subsidiary, or their French business, which improves their margin, and that's also why you can see for I believe it's, if you do not look at the adjusted numbers, they will have a really bad result. But that's already it's because of the write-offs and things like that. But continuing. So with the revenue of 94.8 billion in 2028 and a 5.5% margin, we get an operating profit of 5.2%. Taxes and interest, I've made interest the number that they are paying now with these interest rates, but that I think that's gonna be lower, and I put the taxes at 25% of the pre-tax net profit, which is also quite realistic, I think. And a PE ratio of 12, which is actually similar to the current one, but if this does play out, it's going to be better fundamentals, so the PE ratio of 12 is also quite conservative. But this gives a market cap of 41.5 billion, which is an upside of 78% on the current market cap of 23.3 billion. But then also, this is not accounting for the buyback program nor the dividend, which I believe they will keep at around 6.5%. Obviously, it's going to be less if the share price rises, but it's about that, which over the 4.5 years coming will make a total upside of 111%, and which makes a CAGR over the next 4.5 years of 18.1%, which I think is really great for such conservative guesses. I mean, if it does grow 5% every year, the PE ratio is probably gonna be 15. I mean, that's a huge return right there. So yeah, obviously not investment advice, but I do like this company, even though it might be boring. I think it's really interesting, and a way for the ones who only invest in US to diversify. But yeah, and as for the message to the patient investor, hopefully you're watching. I would be interested in working with you for free. I would love to get the opportunity to do research, talk to you about things like this, and I believe we could have a mutually beneficial relationship with these sorts of things. So I will leave my email down below. I hope to get an email for you and we can discuss from there what we want to do. But yes, thank you for watching and have a great day.